From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 20th, 2015. In just a moment, I'm going to be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. But first, I want to recap a couple of trade suggestions over the past few days, starting here with the US yen. Yesterday, suggesting a buy scenario just on top of the blue shaded area, right around the 120.65 level or so. First off, we're following the pattern of the trend. This is the daily chart, of course. We're following the pattern of the trend. We can see the long-term green trend line here coming all the way back from January. So far this year, it's been in an uptrend. Throughout the pattern of the trend, I have these three circles here to give you a real good idea of what the trend has been. It makes a rise, a fall to support, as you see here in the orange shaded area in the first blue circle at the bottom left. Then it broke out, made a rise, a fall back to support into the purple shaded area, support there, and then a rise. Now we've made a new high into the yellow shaded area. We've fallen back. Of course, with FOMC on Wednesday, we saw a pretty stiff pullback, a touch of the green trend line all the way down here in the 119.40s and 50s, and then a pullback. Once it got back on top of that blue shaded area, I felt comfortable enough to expect a support there once again. If you follow it back to the left-hand side of the chart, all the way, just peeking in on the left-hand side, you see that resistance over there on the left. That resistance offering us a clear viewpoint of support. And of course, the blue shaded area and the pattern of trend giving me confidence in that direction. So I took a buy yesterday right into the 120.65 level. That's the buy level. And if you can see it over here, it's a buy. The stop loss is now at break even. It's my strategy to go break even once I see 20 to 25 pips on a trade. So we're at break even now on the trade from 65. We're now sitting right around the 35 or so, 36 pip mark. We've seen as much as about 50 pips on the trade, looking to target, of course, the yellow shaded area, which is our last resistance high, which would be about 85 pips. And clearly anything above that yellow shaded area will look for further profit. So for the day today, I'm still holding the buy at break even right now. Can't lose on the trade. Looking for the target first off to the yellow zone or a breakout there. We look for it to go higher. If it turns back down and settles back down into support in the blue zone, like it did here in the purple zone or the orange zone, then we could look for new opportunities to take a buy here for the US yen. But right now, holding profit on the trade from 120.65. All right, let's move on over to the New Zealand dollar, because actually took a very small trade here on the New Zealand dollar, testing the waters as resistance. It didn't hold as resistance and continued to break higher, and so took a smaller stop loss. But in the trade room we discussed taking a smaller size trade on the New Zealand dollar because of the risk that we were looking at. And that did indeed take a stop, a very small stop. We'll discuss that later on in the trade room. But here on the New Zealand, I still think this is a selling opportunity. I don't think I'm going to change my perspective yet here for the currency pair. First off, the long-term trend, the blue trend line there, it's clearly a downtrend. It's been in a downtrend for a long time. We see the 100-day simple moving average here coming down, following right along that blue trend line. Take a look at that green line, just following right along the blue trend line. So we have two clear indications of the trend. That's the blue trend line, lower highs, lower lows, and the green moving average line, that's the 100-day moving average. Both of those determining what the trend is for us. So it's not too hard to see that. We've also seen a pattern within the trend. It fell, it went into that blue box here in the middle of the trend and went sideways, ranged for several weeks, actually a couple of months there. Went into a sideways range between September and actually January, when it broke out of that range and underneath that blue shaded area. And in a similar fashion now, we're in a similar range, and I've highlighted it with the red box down at the bottom. We can see the two green trend lines, the first rise within the pattern over here, blue circle, rise, and then the fall. Similar situation going on over here on the red box. It rose and then it fell, and now it's rising again, similar to what happened here. You take a look, if I was to put a second circle inside of there, let's just go ahead and do that. Let's put a second circle right here, and I'll change the color. Let's make this one red so we can really make it stand out for us. So we have two circles in there. We have the blue circle, the first rise along the green trend line, the red circle, the second rise in the red circle there. So if you take that and pull that down here like this, and you can see we're in that second rise now coming into the trend line and close to the moving average. So I'm still looking for selling opportunities here for this currency pair. That's the pattern of the trend, and that has not changed at all. The only real thing that's going to change that is if we see a break of the pattern and a new high being made. So if it breaks above the trend line, above the moving average, above the last highs that we see here in the yellow zone, then that changes the pattern. And then yes, we start to look for it to go up. But until it does that, I think this is still a selling opportunity for the New Zealand dollar. Let's zoom it in a couple of times here, get a real close view of it here on the daily chart. So as I said, we did take a small sell into the bottom of the green shaded area yesterday. It broke through the top side, very limited risk. The sell was at 7,400, and the stop loss was up around the 40 level. So it was about a 40-45 pip stop loss. Hopefully you used appropriate risk for the trading account. I still think, again, that this is a selling opportunity as long as it stays under the yellow shaded area. That's the risk that I'm going to be looking for today. Let's take one Fibonacci from the last high here, just the high here underneath the blue zone, down to the last low. Very interesting is that we now see 75.19 is the 786 fib of that range. 75.19, 786 fib of that previous range. So if that's going to be our Fibonacci retracement level, then that becomes a potential entry point based on the historical support here, the trend line, and the resistance that we would expect into the 75 to 75.19 level now for the New Zealand dollar. Zoom out one time. Let's just go out one time. Let's actually also take Fibonacci from the last high up here where it touches the blue trend line down to the current low. And in doing that, we now find that the 50% retracement level of that range sits at the 75.32 level, just again right in the smack in the middle of that yellow shaded area. So the closer we can get in there, the better the selling opportunity and the lower the potential risk becomes. So here's what I'm going to do today. I'm going to set up us a sell inside that yellow shaded area. I'm going to go to 75.15. 75.15. So let's get this order window up. I'm going to set up a pending sell limit at 75.15. That's going to be our sell limit, and we're going to go above the yellow shaded area, so our stop loss needs to be above 75.60, which is the top of the yellow zone, and actually above the last resistance high and the red box and the blue trend line. So let's go to 75.65 for our stop loss. 75.65. So that's going to be our trade for the day today on the New Zealand dollar. Selling around 75.15. You could probably scale into it closer to the 7,500 level if you wanted to. Stop loss just at the top of the yellow shaded area because we just don't really want it to break above the yellow zone if we're going to sell it. And we'll look to target back to the green zone. And anything underneath there will go back down towards the pink shaded area or lower. So first off, our target will be back here to the green zone, and then underneath there we'll go back to the pink zone if it turns back down in the direction of the longer term trend. Like I said, if you get a little bit closer to this, let's actually go down to the 4-hour chart. You get a little bit of closer viewpoint of this on the 4-hour chart, making sure these Fibonacci's are connected properly. As you get there, you can see some resistance here into 7,500. So probably anywhere between 75, 75.15 becomes your selling opportunity. Your risk just above this last resistance high in the trend line and the yellow zone. That way, if it does break out, like I said, to go up, you don't stay in it very long. So that becomes your selling opportunity for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.